What if the way you're reading candlestick charts is only half the story, and there's more to these graphs than meets the eye? You've probably seen them before. Those rectangular bars with lines sticking out of them, used to track the price of a stock, currency, or cryptocurrency over time. But have you ever stopped to think about what each part of that bar actually represents? Most people know that the bar itself shows the opening and closing prices, and the lines, or wicks, show the highs and lows. But that's just the surface level. And here's the surprising part. Understanding what's really going on in a candlestick chart can completely flip your perspective on market trends. Let's take a step back and break down what these charts are actually showing. A candlestick chart is essentially a visual representation of market sentiment, with each bar telling a story about the battle between buyers and sellers. The opening price, the closing price, the highs, and the lows. All these data points come together to form a picture of how the market is feeling about a particular asset. And once you grasp this, you'll start to see candlestick charts in a whole new light. What do the individual parts of a candlestick actually represent? Let's break it down. A candlestick chart is made up of four main components: the open, high, low, and close. These four elements are the building blocks of a chart, and understanding what each one signifies is crucial to deciphering the price action. The open and close prices form the body of the candle, which can be either hollow or filled, depending on whether the close was higher or lower than the open. The high and low prices, on the other hand, are represented by the wick or shadow of the candle, indicating the range of prices during that specific time period. Think of it like a daily report card for the market. The open is like the starting score, the high and low are the highest and lowest points reached throughout the day, and the close is the final score. And here's the part most people don't know. The length and color of the body, as well as the length and direction of the wicks, all provide valuable insights into market sentiment and potential future movements. By examining these components, we can start to understand the story the candlestick chart is telling us about the market's behavior. Now that we've covered the basic components, we can start to explore how they interact and what they mean for our understanding of the market. Vocabulary. Candlestick components: open, high, low, close. What does the body of a candlestick actually represent in a candlestick chart? And how do the wicks, or shadows, fit into the picture? Let's break it down. The body of the candle, which is the thick part, shows the difference between the opening and closing prices of a particular time period. Now, here's the key part. The body can be either hollow or filled. A hollow body means the closing price was higher than the opening price, indicating a bullish sentiment, while a filled body means the closing price was lower than the opening price, indicating a bearish sentiment. And here's the surprising part. The color and fill of the body aren't just random. They're a quick way to see if the market was positive or negative during that time. The wicks, or shadows, show the high and low prices reached during that time, giving a glimpse into market volatility. Think of the wicks like the market's emotional range. They show how far prices swung during the period and can be a sign of market uncertainty or excitement. By looking at the body and wicks together, you can start to see a story emerge about what happened in the market during that time. And that's what makes candlestick charts so powerful. So, understanding the body and wicks is crucial to deciphering the story of the market, and that's what we'll keep exploring. Want to learn more about how to read these stories? Vocabulary: volatility, sentiment, bullish, bearish. What if the shapes we see in candlestick charts aren't just random, but are actually telling us something about the market's mood? As we delve deeper into candlestick charts, we start to notice patterns emerging: the hammer, the shooting star, and the engulfing pattern, to name a few. At first, these patterns might seem like just interesting shapes, but here's the surprising part. They're actually indicative of shifts in market sentiment. Think of it like a conversation between buyers and sellers, where the candlesticks are the words. A hammer pattern, for example, can be like a buyer saying, "I'm not giving up yet," as the price bounces back up from a low point. And a shooting star pattern can be like a seller saying, "I've had enough," as the price peaks and then falls. These patterns aren't foolproof, but they can be a powerful tool for traders to make more informed decisions. By recognizing these patterns, traders can gain insights into potential trend reversals and adjustments in market sentiment, helping them navigate the markets with more confidence. And here's the part most people don't know. These patterns can be used in combination with other forms of analysis to create a more complete picture of the market. So, as we continue to explore the world of candlestick charts, remember that these patterns are more than just shapes. They're a window into the market psyche. Vocabulary, sentiment, trends, reversals, patterns, psychology. What if the patterns we see on a candlestick chart are just the tip of the iceberg, a visual representation of a much deeper and more complex set of market forces at play? Let's dive into the data behind the chart and explore how it reveals the underlying dynamics of the market. Think of a candlestick chart like a snapshot of a busy highway, where the price is the traffic flow and the volume is the number of cars on the road. Just as a highway with heavy traffic can lead to congestion and slow movement, high volume in a market can lead to increased volatility and slower price movements. And just as a traffic camera can reveal the flow of cars, the order book can reveal the flow of buying and selling orders, showing us where the market is heading. The data behind the chart also includes other market forces like leverage, which can amplify price movements, and market sentiment, which can influence investor behavior. By looking beyond the visual patterns and understanding the data that drives them, we can gain a more nuanced view of the market and make more informed decisions. And here's the surprising part. The same data that creates the patterns on a candlestick chart can also be used to identify potential market turning points, making it a powerful tool for understanding market dynamics. Vocabulary, volatility, leverage, sentiment, congestion, amplification. So, what does a candlestick chart actually show? Now that we've broken down the components and explored the stories they tell, it's clear that it's not just a simple graph, but a window into the market's behavior. The wicks, the bodies, the colors, each element provides a glimpse into the actions and emotions of buyers and sellers. By understanding these elements, you can gain a deeper insight into the markets, and that's powerful knowledge. You can see how market sentiment shifts, how trends form, and how volatility plays out. And here's the surprising part. It's not just about the individual candlesticks, but how they interact with each other, forming patterns and trends that can help you navigate the markets. So, now that you know what a candlestick chart actually shows, you can appreciate the complexity and nuance of the markets. To learn more about how markets work and stay ahead of the curve, consider subscribing for more explanatory content, where we dive into the mechanisms and stories behind the markets and help you decode the world of trading and finance. Vocabulary, volatility, sentiment, trends, nuance, explanatory.